The one other counter that will be in focus is ITC. Now, that's on the back of earnings as well, which reported post-market hours on Friday. Now, we did see some pressure on the stock before earnings, and we've largely seen the FMCG segment disappoint. But let me get my colleague Mahima to talk more about this. Mahima, it's been a disappointing quarter for ITC at a time where the stock price correction has been buoyant. Could you give us some perspective on what was Q1 like?
Right. So overall, a slight miss in terms of where the earnings stand. But overall, I think the momentum in cigarette volumes recovery has continued, and that is something that has been positive for the counter. Even in terms of the top line aiding, it's been the cigarette business, the agri business, and the FMCG business that has overall seen the recovery. So that's with regards to the key takeaways, healthy cigarette volumes, as I mentioned earlier. In terms of the overall earnings as well, in terms of the EBITDA, the margins have inched up sequentially for the FMCG business, which is a positive, and premium products and digital first products have seen a good growth momentum, so that continues. Tobacco inflation, of course, is the key reason as to why margins are under pressure, but that was something that the street was already expecting, and that's already kind of penciled in the stock performance. In terms of the overall earnings, let's try to pull that up and see how the earnings have fared. Revenue has seen an uptick of around 20%, net profit flat. EBITDA also almost a growth of around mere 3%, and margins have come down to 31.7% versus that of 37.2%, largely on account of tobacco inflation as well as inflation in the FMCG pack. In terms of the segmental revenue, because this is an interesting one, cigarettes saw a good growth of around 8%, FMCG growth of 5%, agribusiness stellar growth of 39%, and paper business is the one overhang that remains, though a revenue growth of 7%, but overall EBITDA and margins have not seen a growth in this particular segment, and that is also one of the key reasons as to why margins are being weighed on. In terms of what brokerages are expecting, well, brokerages have maintained overall their stance of outperform or buy on this particular counter. Macquarie has maintained outperform with a target price of 500. It's seeing signs of urban recovery, something that they've guided for. 6.5% is the volume growth that they have penciled in, and ITC has continued weakness in paper is something that's concerning. That's something that the Macquarie brokerage doesn't like. In terms of Jefferies, cigarette volume growth has accelerated on multi-fronts, and the growth that they are penciling in is around 6 to 6.5%. Segment EBIT margins continue to trend down, although overall EBIT was just in line. The other segments reported lower than expected margins due to the tobacco inflation in picture, and overall EBITDA margin growth was muted is what they are saying. Lastly, Morgan Stanley again overweight with a target price of 500. They're saying that cigarettes differentiated and premium offerings continue to perform well, and paper was affected due to subdued realization. So this is the overall view of how ITC has panned out in first quarter of FY26. Puneet.
Well, thanks so much for that, Mahima, getting us perspective on this key stock, and that'll be one of the ones to watch out for in trade today.